Hi, everybody. This is Gary Dean, and this is our sentiment timing free weekly video report for Wednesday, December 14th, 2016. So I skipped last week of sending one out because honestly, the markets are pretty boring. There was really not a whole lot to report, and Woody and I both kind of were. There's only so many ways that you can say the market's going to go up until this date, and so when you don't really have that much to report. I didn't want to waste your time, and we wanted to wait for the Fed meeting to come through, which we were kind of anticipating some weakness after that, and I'll go over all the reasons why and what we expect moving forward. And our primary goal at Sentiment Timing is that we believe that the investors in the market are irrational, and there's always going to be an irrational element at work. And that is what creates market opportunities. And when you have these irrationalities, you could get some huge moves to the downside, but not only that, you get them to the upside. And we're not just a short movement newsletter. We don't just go short positions, even though those are the most exciting ones. We do both, where the top is supposed to be and when the bottom is supposed to be, and it's based off of investor sentiment, and as well as Woody's proprietary technical timing dates, and that predicts when the market is going to reverse its trend. And he's been doing this for over 40 years for some of the largest institutions in the world, and we're lucky enough to have him as Sentiment Timing guiding the way. So the way that the sentiment works is basically you're going to get these sentiment cycles are going to repeat over and over again. And Woody's mastered the time period that it takes to get from the euphoria to the capitulation, and then from the capitulation back up to the euphoria. So when we're up at this thrill, in between the thrill and the euphoria, this is when you want to start scaling out of your long positions and possibly building a short position. When we start heading down, once we start getting into the panic and the capitulation, you start closing out your short positions and look to build a long. This is the way the institutions trade. They're shorting up here and they're buying here, and from there they're letting the retail traders push it down into the panic area and move it up into the thrill and the euphoria, and they're doing the exact opposite of what they're doing, and that's how they make a killing month in and month out. But the really the main thing you need to know is when we're getting to this euphoria, and Woody's we're one of the only websites in the world really that tracks investor sentiment, and Woody's one of the pioneers on it, and he wrote a book that I read, and that's pretty much how we became partners. And it's it's a very relaxing way to trade. So just on the 12th, we had put out to our members, and this is just an email alert. This wasn't a regular report. Was that we had a 98% bullish, and tactical weakness often develops in the days following that sort of surge. So we have the FOMC week, and volatility should occur. Don't become complacent. So basically, the warning was that we had very high sentiment, and we had a reason for why the market may not continue up. But the Trump low that Woody was calling for way before the elections were there. We were looking for a rally to hit post elections. I don't know if any of us really anticipated that it was going to be to this extent. But a lot of people were thinking that if Trump won, the markets are going to crash, and Woody was one of the only ones that was saying, that the markets are going to rally after that. And what he's now saying is that the Trump low is eventually going to turn into a Trump top, and it's going to take more time to unfold. So we know when to expect that top, and that's what I'm saying. When you know when to when you give the kind of the period to expect a top, there's only so many things you need to do, especially when the market's trending up. It gets kind of boring, and that's actually leads me into what I'm going to show you a little bit later. We're talking about adding another feature to the newsletter, and I'll show you what it's all about and all that. So anyway, this is from yesterday's sentiment data. We came in at 98%. So we had, the sentiment has been huge up here. And it's one of the reasons why you don't want to stay, that bullish. Now, yes, we had a 95% here, but we weren't anywhere near where the technical turn date was. So just because you have a high sentiment reading doesn't mean that the market has to go. But when you have a 98%, and Woody's saying that there's a reason why we could head down, that's when you start paying attention to it. So I took a short position for one that we had reasons to believe it from the sentiment reasons. We had sentiment that was really high, and we were trading within this very steep channel on the S&P, and we had bearish divergences. So after the Fed meeting today, I actually put out a short position, and I sent it to my members, and it was basically right after it. And really what I was using was just a 6-point, I think it was a 7-point stop. So even if the algorithms or the people decided that they were going to buy after the Fed meeting, I was risking 7 points. My target was 22.43, 22.31. We went all the way down to 22.48 today. I didn't really think it was going to get there, so we got short. I sent the report out. It was I sent this alert out when the S&P is at 22.71. So there's a good head start. But as I've said here, this is just going to be a quick trade, and it's most likely I'm going to be switching to the long side because I know when to expect the intermediate term top. And as we can see, this was when that alert went out, and from here we had a really good drop. So it's it worked out really, really well, and like I said, it's one of those things that I know not to hang on to these too long because we're not anywhere near where we're going to be hitting the actual top. And it's just the way that it's an easy way to trade. So one other reason why I was looking for the top was we have 1, 2, 3, 4, 5, and again, this is a short-term top. This isn't your intermediate-term top. So once you get the 5 waves, we had the bearish divergences in place. That gives you where you can expect some kind of pullback down to the 22.48. It could go all the way down to 22.06 and actually still be bullish. We also have there's a gap all the way down here at 21.93. I'm not anticipating it's going down there, but once I start getting into these areas, I'm going to start closing my short. I have my stops at my entry. And once I start layering out here, then I start looking to build a long position. So that's really, how I anticipate to work this trade is I'm not going to lose money if we continue down. Then I'll just, layer out of it until we get to support, and I see support hold, and we start moving up. Then I'm just going to jump on the long side. On a 60-minute chart, you can see we also had the bearish divergences, and we are very overbought. So the continuation of this rally after the Fed meeting was not, the odds were not high. And once I had a proper risk reward trade set up like I had today, I took it, and that's it. So a typical retracement from this low to this high would be down to the 22.31. That's a 23% retracement. What would make more sense is actually down to the 22.15 or even the 22.03, which, after a big run like this without any real breathers, these would be the target areas. Now, again, we're in the seasonalities in the bulls camp right here, and that's another reason why, again, the trade I'm in is just a quick trade, and I may get stopped out tomorrow. I don't, I'm accepting that if it happens. But I think that their reasoning to take the short position was there, and that's why I did it. So that's really, when we get down to these areas here, be careful because, we're not really expecting that intermediate term top to come for some time, and our members have known this for a while. So the trade that I sent out, that's part of my Markets Path the Markets Path website or service that I run. And when you become a Sentiment Timing member, you actually you get a free membership to Markets Path. And basically, I do nightly video reports, morning notes, email trade alerts, and then we also have a trade room. So that's part of the membership. And also another added feature that we are going to be putting in is we're in talks right now. We're not there just yet, but we're working out the final details. Is we're hiring a senior cross-asset global stock market analyst, and he's actually ranked number one analyst within a leading global or emerging market fund of $27.9 billion during 2016. He's worked with Jim Rogers, and these reports he puts out are really, really in depth. They have to do with the technical basis. They have to do with a fundamental reasoning on things, and what we're looking to be doing is we want to put out some actual reports to show our members right now, and this is what we're working at. So we're probably going to do a full month where we're going to be getting these reports for free, and then from there we're going to have to work out something with them on how we want to do it. But it's one of the the special that we have going right now. This is something that you're actually going to probably be getting these free stock reports, and they're only going to be probably 2 a week on it. This isn't something that comes out every day, but gives price targets, gives fundamental reasons on why to expect a move, and it also gives stops so you can manage everything. But we're pretty excited about this, and hopefully we can sign our contracts and get everything up and running, because it's going to be a great added value to subscribers that are going to be able to know when the markets are going to be reversing. But like I said, sometimes things get boring, and when when a top is coming, and it's not for a month or 2 months away, there's not, our sentiment timing reports, you can only really say so much about, okay, the top's coming on this. But with these new stock reports that are going to be added into this, now you're going to get new trade ideas throughout the week on it. So it's something that we're pretty excited about, and we're working hard to put everything in place for it. And like I said, if you sign up, we're only doing this for a limited amount of people, but when you sign up, you're going to probably get 30 days of these stock reports, which is going to be about 8 different trade ideas for the month, and hopefully you guys will be able to make some money off of it. So with that, have a great night, and I will talk to you guys next week.